Will the markets hit new highs for the summer? Well, if you're a trend trader, you may think so. If you're a contrarian trader, you think we're overbought. If you're a volatility trader, I'm not sure what you're thinking. But seasonally, are we prepared for a seasonal summer? I want to talk about that for a moment and share with you my thoughts on the subject. So this is a chart of the 1-year S&P 500 SPY. Now, as a trend trader, you might say, well, it looks like we're trending up, but we had a severe move down on the right-hand side of the screen. But is the trend up? Maybe not looking at this chart. Contrarian traders may agree. Volatility traders say that there was a lot of volatility here. But where are we seasonally? And more importantly, do you see the 10 holiday opportunities in this trade? Well, you may not, because it's hard to spot them on a 1-year chart. But the markets have 10 holidays throughout the year where the stock market is closed. All but Juneteenth have years, even decades of data to evaluate for patterns. Now, the theory is that the markets are stronger the week prior to the holiday. I want to test that theory, and I want to talk about reality and a twist on holiday patterns for the summer. So this is the holidays last year, holidays in 2024. Usually we see a week prior to the holiday where the markets tend to go up, and for decades that actually worked. But over recent years, it's shown mixed results, because if you notice here for Memorial Day of last year, we started and ended at the same place. July 4th was a clear winner, where Labor Day was a clear loser. We're seeing more and more of that happening with these smaller short-term patterns. Now, traditionally, a trader would step up to the plate and buy an exchange-traded fund like SPY a week prior to the holiday and exiting the day before the holiday. Can't exit on a holiday, market's closed. This has, again, had mixed results in the past 10 years. What is my way? Well, I went and looked at the holidays through longer time periods. This is the money calendar, and what I did was I took a look back, basically the 30 days before July 4th. That puts us between Memorial Day and July 4th. Those last 10 years have had a 70% win rate and a 2.3% return on investment. More importantly, take a look at the years that we worked. We almost doubled on average the 3 years in the last 10 that it did not. Seasonally saying, we have a bullish outlook. If you go back and you look at the years that we were making new all-time highs early that year, it's also a high likelihood we're going to go higher. Finally, take a look at the money calendar. The money calendar for June, and I'm not going to go into specifics, but every single day in the month of June, we have 90% or greater in terms of trades that are bullish versus bearish. So everything is leading up to a seasonally higher summer. In summary, I don't want you to think about what's going to happen today. I don't want you to think about what's going to happen this week. I don't want you to even think at all. Thinking is intuitive, where you think something is going to go up or you think something's going to go down. We want to be objective traders, and seasonals are bullish this summer. So objectively plan for it.